Investing? Wait, isn't that too risky? If you are someone who thinks investments are scary, especially because of things like bankruptcy, then this video is for you. We are here to walk you through the basics of smart investing and show you how you can even handle risk like bankruptcy with confidence. Let us start with the basics. First, we will talk about NCDs or non-convertible debentures and then dive into the safest options for investing with NCDs. So, what is an NCD? An NCD is like a loan a company takes from the investor to raise money. The cool part is, NCDs often offer higher interest rates than what you would get from a savings account or a fixed deposit. Plus, you will know exactly what you are earning every year. You might be thinking, what happens if the company goes bankrupt? Let us break down the two main types of NCDs, unsecured and secured. Unsecured NCDs are not backed by specific assets. So, if the company goes bankrupt, these investors are lower in line for repayment and may not get their full investment back. But with secured NCDs, you are investing with some protection. Secured NCDs are backed by specific assets like company's property or equipment. This means if the company faces bankruptcy, then the secured NCD holders have first claim on these assets, giving you a better chance to recover your money. Are you ready to start your investment journey with more confidence? Then begin with secured NCD for a brighter financial future.